Great.
All right, good evening. It's June 23rd, 6:02. We're calling the meeting to order, special meeting to review our audit from Cero. So we can all stand for the pledge of allegiance, please. Pledge of allegiance to the flag of
the United States of America, and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.
Can you do a roll call, please?
Councilmember Tobin is recorded absent. Councilmember Sullivan,
Here.
Councilmember Pinello,
Present.
Lane,
Here.
Councilmember Conley.
Here.
Councilmember Carpenter is recorded absent. Councilmember Beckwith.
Present.
Councilmember Michaels.
Here.
Well, thank you. Well, I welcome Mr. Dwayne Cho from Cero, who's going to go through our audit information for the 2024 audit. So I appreciate you coming up from Ithaca or that direction. And appreciate your efforts and everything you've done to put this together, and certainly we kind of give maybe a 40,000 feet, going to go through everything, and then we'll open it for questions, council members.
Okay,
Thank you.
great. All right, man, thank you. Thank you for a few minutes this evening to review the 2024 audit. I want to start by thanking Chuck, by thanking Casey, who I know is that. A lot of work put in by a lot of people at the city to get us to this point. So, we're trying to keep this straight. Oh, I'm sorry.
That's all right.
You told me to do
It's
that.
in the middle. It's not there.
There we
There you
go.
go.
That's great. So what you have in front of you are the final reports for 2024. There are 3 different documents that we issued as part of the audit process. There is the financial report itself, which is most of the information. That includes the financial statements, it includes the notes, it includes the more significant findings. And then we also issued a management comment letter with some I guess the less significant findings also. And then we also issued a communication letter, which is kind of standard audit language. Yeah.
Don't mean to interrupt you, Chuck. Do you have copies for us or not?
I didn't make copies of no copies.
If you got one copy of it,
I think it'd be, we usually have copies when we go through an audit like this.
That's
Derek.
that's the communication letter. Yeah, that's one of the documents that I'm referring to.
Of the 3 that you referred to.
Yes.
And then that's what they're about.
So we got 74 pages.
Wow.
That's gonna take.
It'll be a while.
Well,
Oh, what a shame.
But everybody will stand.
I know, but
So while you're waiting for those copies, I can kind of give some background, and then once you have the numbers in front of you. So I wanted to, I guess, give you a sense of kind of where this is in comparison to the 23 audit. Kind of what's different, because I know there are some pretty significant differences. So for 2023, we issued what's called an adverse opinion. An adverse opinion means that we could not, or that we believed that the financial statements were not fairly stated. That there were significant issues, significant differences that we could not reconcile. Right. For 2024, the ones that you're going to get in front of you in a few minutes, we issued what's called, I guess a split opinion is the best way to say it. We issued what's called a disclaimer of opinion on the operating statements, on the revenues, expenditures, and changes in fund balance. And that is because we were not sure, we could not get enough sufficient evidence to come to an opinion on the revenues, expenditures, and changes in fund balance. A lot of that had to do with the beginning fund balances from 2023. Because those beginning numbers affect the 2024 activity. There were some errors corrected in the 2024 financial statements. But even after those error corrections, we could not get to a point where we felt comfortable with the beginning fund balance numbers and some of the other revenues and expenditures. A lot of water and sewer revenues was one where we couldn't get those numbers to work right. But we did issue an unmodified opinion, a clean opinion on balance sheets. The balance sheet for the fund basis, financial statements, as well as the balance sheet for the government-wide basis. And what that means is that we were comfortable with the assets, the liabilities, and the ending fund balance and the ending net position. So there's two different opinions, depending on which parts of the financial report you're looking at.
Can we ask questions as we go?
Yes,
Yeah,
absolutely,
I do have one.
sure,
Please keep in mind that whatever we're informed about tonight. I wanna make sure that we have enough information going into the 2025 audit.
Mhm.
And anything you bumped into, I wanna make that available to the council members. So that we try to get this straightened out as soon as we can.
Right.
We knew there were gonna be problems going into this.
Yeah.
But I wanna make sure that we try to correct them as we go forward.
sure, understood, yeah.
So my question is. Problems from 2023 carried through to 2024.
Mhm.
Will those continue to haunt us? Going forward, is there a point at which we just? Cut it off and say that's done,
Right.
that was then,
So hopefully not. And that is, I think, the best news of all in this report
okay?
is that, as I said, the balance sheet. We're comfortable with. So when you start the 2025 audit. The beginning fund balance numbers, we're comfortable.
Okay.
Okay, so as long as we get good evidence for the activity during 2025. And as long as we get comfort with the ending balance sheet at the end of 2025. There's no reason why the 2025 audit opinion can't be a clean opinion,
Okay,
okay?
and then that should affect our credit rating. Positive.
I would think so. As somebody who doesn't do credit ratings, I can't say, but I would think that having a better opinion on the financial report would be a good thing. Yeah. Okay,
So, a lack of quote unquote paperwork, probably carryovers
mhm.
were the default
Yeah, and again, a lot of that goes back to,
ones. Or documentation, how we write paperwork.
right, yep, okay. So there are some findings in here. There are some issues with respect to compliance. One thing that I'll mention, the total general fund budget was overspent in total by about $1.8 million during 2024. There are several categories, several functional areas within the budget that were overspent. Most of that is related to grant funding that came in. And the grant funding that came in wasn't added to the budget. And the associated spending for that grant also wasn't added to the budget. So you end up with, revenues being more than budgeted. Because you get grant revenue that you didn't add. But you also have expenditures being more than the budget because you didn't adjust the budget either on the revenue side or on the expenditure side.
Was any of the stuff that you found for the grant money? I hope you found it well allocated in the right positions.
From what we could tell, yes. From what we could tell, yeah. Okay, so now that you've got them all, I'll refer to some page numbers. So the issue with respect to the budget that we were just talking about is almost at the very end of the financial report. It's on page 60. Where you can see the details with respect to the budget over expenditures. There is a list in the middle of that page that shows the different categories, different functional areas that were overspent during the year. It doesn't show the ones that were underspent. I think the employee benefit category was the one that was most underspent. But the ones that are listed here are all categories that were overspent. Want to back up just a couple of pages to page 58 of the report. And so this is one of the other findings that we had, and it relates generally speaking to just financial reporting. This is a comment that we've made, I guess, the last 2 or 3 years, that generally speaking, there are either things being reconciled late or in some cases, things not being reconciled at all. And that makes the accounting very difficult internally, and it makes the auditing very difficult externally. Because in some cases, we end up having to make significant adjustments to get the financial information corrected as part of the year-end process. And you can see there is a table roughly in the middle of page 58 that shows, in very broad categories, the totals for adjustments that were made during the audit process. There's obviously been a lot of personnel turnover. It makes it more difficult to keep up with those reconciliations. But the more that can be done to get those reconciliations done more timely, the more of these issues can be found internally, and the less of them that you'll find externally.
How many of them currently are being caught by the audit as opposed to internally by the city?
I guess I don't have a number.
Okay.
Yeah.
How significant are the issues that the city is not catching on its own that are instead being flagged in the audit?
Yeah, I mean, I think in terms of dollars, they're pretty significant. Yeah. And again, if you look at page 58 again, you can see, the general fund numbers are probably less significant in size. We've had better luck there, but sewer fund, we increased assets by almost $250,000 as part of audit adjustment. Capital projects fund, we increased liabilities by $750,000 as part of audit adjustment. So there are some pretty significant numbers there.
What could council be doing in terms of helping make sure we're catching these things up to speed on where issues are?
I think what council can be doing is trying to make sure that that city administration and finance has enough people, has the right people. So that those reconciliations can be done internally and done timely.
Which you mentioned earlier, obviously we've been through a bunch of changes in the last.
Correct. Right, you know, that obviously personnel turnover is, you know, something that's gonna happen. The more that you can do to try to smooth that out, the better.
Are you finding that some of the money's got put in the wrong allocations, just not put in the right classifications?
I think these types of issues that we found were more along the lines of. Because reconciliations weren't being done, those accounts then had to be adjusted. Correct.
So are we making the same systematic errors? Or is it a big error that got carried through? It seems to me you're saying that we've got some bad habits that need cleaning up.
I think it's some of both, yes. I think there are definitely some bad habits that need cleaning up. But I think there's also, you know, more. Either more people or more time available to make those reconciliations more timely.
You mentioned having the right people, where were you headed with that?
I think it's just a matter of making sure that the people that you have are doing the right functions.
And what functions are currently not taking place?
I mean, I think a lot of it, again, goes back to reconciling. I think, you know, the day-to-day checks are being recorded, you know, checks are being written, those things are all happening. But it's when you try to take all that massive data and put it together and make sure that it's in and it's recorded in the right place and it's recorded at the right time. You know, that whole process either isn't happening or isn't happening timely.
Which I think could happen, but unfortunately, we keep trying to catch up with everything. We get current. It's a lot easier to stay current.
Absolutely.
Yeah.
Right now, we're just trying to reconcile the past,
Right.
and that's where we've been.
Yeah.
And so now they're trying to scramble and put all this stuff together and dig it up, which. I'm
Right.
not pointing fingers at anybody, I'm not here, you know what I mean? We're all responsible in
Mhm.
my eyes, but I'm not gonna ever point the finger to somebody, but. Which everybody's doing a great job to get it caught up, but that's where all this stuff is all accumulated and not gotten done, and now we're trying to reconcile what's been done and. Getting the information, this is where we're at.
Well, hopefully with this, we start with a clean slate. But then
Totally agree.
I don't wanna make the same errors, so do we
Neither do I, I'm sure nobody here does either.
need more, I think, question, it sounds like, do we need more help in our finance department? Is there just too much for two people to do?
Did the audit assess the city's policies and procedures in terms of internal controls and things of that nature?
Yeah, we gained an understanding of the control system. That's always part of an audit. We don't issue an opinion on the internal control system. That's really never part of an audit. But yes. Right.
Can you speak to areas of deficiency with policy and procedure? I know the audit didn't fully dive into that, but are there any things you could suggest, areas for improvement, things of that nature?
I mean, I think, again, it goes back to this, you know, this process of reconciling, of making sure that things are all being accounted for. And I think that that's really the significant problem. There are some in the management comment letter. There are some, I guess I'll say, less significant findings. That we had, so we did have to make an adjustment. Interfund activity, the due tos, due froms, the transfers back and forth between funds. Those weren't all reconciled. Again, it goes back to reconciling. But that specific issue, we ended up, having to make an adjustment to make those balance, right? Because at the end of the year, those have to balance. So that was something that we had to do. The city has some allowance accounts set up, allowances for taxes receivable, allowances for loans receivable. Those numbers haven't been adjusted in some time. We made some adjustments, especially to the loans receivable account. Because a lot of those loans are kind of stale. And so we kind of, you know, we balance those out. The CDBG programs are all administered through a third party. The city's records aren't being caught up to match the third party service person's records. You know, so we made some adjustments to get those balances to line up. Those are the types of, in the end, really less significant things, but it all goes back to the same overarching issue, right? Because those are all things that should be part of a more timely reconciliation process, because all of those accounts are the types of things that on a monthly basis, on a quarterly basis, you'd be looking at and seeing, you know, do these records line up with those records? And in a lot of cases, they weren't.
And what are the adverse impacts from failing to keep up to date on that?
Right. I mean, so I think there's two overarching impacts. Number one, it makes it impossible really to be timely with these audits. First, you know, you're talking about almost 18 months ago. Number two, and I think probably more relevant to the day-to-day, is that the internal financial information that you're looking at isn't necessarily accurate. Because we're making some fairly significant adjustments as of the end of 2024. And because you're not able to get that more timely reconciliation, you know, the information that you're looking at now probably needs some reconciling changes.
What you're saying is it's probably outdated.
In a lot of ways, yeah. Mhm. Mhm. Right, yeah.
Outdated in software, outdated in help, or outdated.
Outdated in staffing or.
I think I in some ways, all the above. Yeah. There were two more findings that I wanted to talk about in the financial report. On page 59 of the financial report, there is a discussion of capital project reporting. This is also a finding that we've had in the last few years. Really what it comes down to is, you know, a perfect capital project accounting system will track each project separately. Right, the revenues for each project, where's the money coming from, where's the money going for each of those projects. You have that for some of the larger projects, but you don't have it for all the projects. We were able to do a lot of work to get a lot of the reconciling done so that the biggest numbers, and again, the balance sheet numbers, we felt pretty comfortable with. But there's still a lot of gaps in the smaller projects.
And just so you're all aware, when you're talking about these projects, you know, Main Street, for example, you know. Decisions gotta be made and gotta be made now. Unless every capital project, we can get extra money to somebody's gonna do the paperwork on this, we can't rely on the city to do it, because they're trying to do the day-to-day. And get these big capital projects, you almost need somebody that's gonna sit there and do daily paperwork and all the numbers on that project for individual project.
Right.
Until it's all done, and then you start putting the numbers together, and all of a sudden we're. Cause, you know, anything, the municipalities, whenever you get $4 million, we might as well plan an 8. You know what I mean? capital projects are never come in what they give you, ever. Any project, let's put it that way.
How common is it to have repeat findings of this nature?
I guess I'd say it's not altogether uncommon. Yeah. I mean, a lot of the audits that we do, we do have findings that recur. I would say the significance and the number of findings here are more than we usually have.
What's more typical, or what makes this disproportionate to other municipalities?
I guess I'd say the number of findings is one issue. Typically, I guess, I don't want to say typically. It is not unusual for us to have one, maybe two findings. Here, in the financial report, you've got 4. Couple of which are pretty significant. In the comment letter, there's 5, maybe 6. So that's a lot. And most of those findings are recurring. That's a lot to have that many that, are continuing to happen.
Recurring for how long?
Most of those findings are recurring at least to when we started. Our first audit year was 2021. We did have one more finding that I'll mention on page 61, the very last page of the bound packet of the financial report. And this, again, it's kind of the same issue. It goes back to reconciliations, but this one specific to reconciling cash accounts. The city continues to reconcile to a cash book, which is kind of an interim step. Because the cash book isn't necessarily reconciled to the city's computer system, to the general ledger. And so we have, there are differences between the bank statement or the bank reconciliation and the cash book. And then there are differences between the cash book and the general ledger. So in some ways, it takes twice as long and there's twice as much work to get where you need to get to. Really, where you need to get to is your bank reconciliation needs to agree to your general ledger. Alright.
So what I sense out of this is a staffing issue, and not time to do it in time.
I think that there is a timeliness issue for sure.
And an antiquated way of doing it.
Well, we all know we're behind the ball on a lot of
Right.
technology around here.
And I think, right,
Why use a ledger book when it goes straight to the computer?
right.
Katie, that's the way it was originally set up and then change that over.
Oh, I know, it's not your
No,
system.
I know,
You inherited this system.
I'm just trying to. The people that come in after me to fix this problem can be done, but it's gonna be a pretty large undertaking.
Chuck, by any means, we're not.
No,
trying to throw you
I know
under the
that.
bus. One me. That's
No,
the
I know that.
But I
I just wanna
guarantee I
make
know
sure y'all
exactly where you're coming
understand.
from. This has been stemming for, I'm not blaming anybody, but we're so behind the 8 ball here with technology.
We need solutions.
Yeah.
We don't need PowerPoint.
We're not here to argue, we're here to fix the problems and not point fingers, move on.
Frank, I just want to clarify, just so everybody understands, the cash book was the way the original, go back to paper ledger, and then they went to the cash book, which is this, spreadsheet that's done Microsoft. And then we went to Munis, and we never got away from, I don't think anybody ever, I know this, because it was a 38-year-old, bat that was doing water, which is still using Ledger, but she didn't trust the cash book, which is the IT version,
Right.
or Munis, which is our next version.
Right.
They still didn't trust that, so
Right.
she was doing that. So we got out of that, and then of course, we changed over that water software, Perfect Storm. So that's why some of the errors in some of the water software, and that was done And then there was nobody else that really understood how to do that then, because that person retired. So I didn't want to get away from the ledger, let alone go to that other computer and then go to this.
Mhm.
Wow. So I think this cash book has been leaned on pretty heavily and doesn't need to be there. We're overcomplicating things.
Yeah.
Which is causing the delays, which is causing the errors to do that. It's oversimplifying it, but those, just want to retort on that just to make sure that everybody understands that, Dwayne's here, that that's the corrective action plan we're working on currently. Is to get out of that cash book so that they're all independent. And Chuck has said when he got here is, so we keep track of those accounts as the one group asset.
Mhm.
But that's why it took so long to get some of this information out, because all those adjustments had to be made. If we had got this audit out a month ago, what was that number? Over $1 million of changes since that month ago that had been made, adjustments that gave you the couple that can say that were accurate.
Right.
When was that corrective action plan first adopted? Because this is a repeat finding going back to at least 2021.
Yeah, I think most of those findings, those 4 findings that are in the financial report, pretty sure that all of them were in the 2021 report. Positive, but I'm pretty sure they were.
And so with the cash book, that was deemed to be a material weakness. Could you define material weakness?
Could I define it?
Yeah.
Material weakness is a weakness in the control system that could cause a material error in the financial statements to not be detected.
And what are the repercussions of not detecting material error like that?
7 audit findings written and 4 elements.
So the ramifications, I guess, again, internally, is that the cash balances that you're looking at in your internal financial statements aren't right.
So we're making decisions based on the fact information.
In some cases, yes. Mhm. Mhm. Right. I did want to, not too much in the detail. Obviously, these are 2024 financial statements, so they're, a little less relevant. But the statements themselves, I would encourage you, if you're not gonna read through the whole thing, if nothing else, read through the management's discussion and analysis, which is page 5 through page 5J. There's some good narrative information in there. For those of you that aren't, used to reading financial statements all the time. That section is a nice narrative format, but it gives you a sense of the financial status of things. There's some charts, there's some graphs that I think are helpful for you to understand in there. The government-wide financial statements are page 6 and 7. And so the government-wide statements take all the funds, put them together, include capital assets, include long-term debt, include your share of the statewide pension system obligations, include an actuarial estimate for the city's retiree health insurance obligations. So those pages put everything together. And give you a sense of where the city is as a whole financially. That statement reports a total net deficit of $40 million. I will say that just about every municipality has a net deficit when you look at this type of presentation. And that's for 2 reasons. The smaller one is the statewide pension system. You have no ability to fund it or anything, right? Those numbers are what they are. A report comes down from Albany annually, and your share of it is a number that gets thrown into the financial statements. And there's really nothing you can do about it. The other difference and the bigger difference is the retiree health insurance obligation. Again, because there's no mechanism to fund that liability. So that liability, which is reported here at $86 million. There's no offsetting asset. Right, it's just a liability falling to the bottom line. And there's
It's gonna be
nothing,
there forever, so.
it'll be there forever. The only thing that can be done is negotiations, and you're not gonna negotiate that all away. So. Yeah,
Sure, one of the important aspects of that, if you look at how that number's grown over the years, okay? That's because of health insurance increasing and we're still, okay, becomes much harder for the city to sustain that number. What was it 5 years ago? It's all enough quite a bit.
yeah, it did, when we go back, so there is a chart here, that's the back of the financial report.
And you could, basically in the city's aspect, we're spending probably about $2 million a year in health insurance for retirees. Okay, and that number just keeps climbing. Okay, and that's due to what Wayne was saying is about the contracts we have in place.
Don't take this the wrong way, I think it's great, but we're living longer.
Right,
You know,
Right.
Which is great for them, but it's just a big number and it's not going away.
on page 47 of the financial report, if you want to see it, there is a schedule back there. That shows the changes in this liability over the last several years, and to emphasize Chuck's point, 5 years ago. That liability was $68 million, and now it's 80 cents.
5 years.
Got it. Here. The fund financial statements, the ones that you're more used to seeing on a regular basis. Those are pages 8 through 11 of the financial report. So page 8 is the balance sheets, shows the assets, the liabilities, the net asset or the fund balance. For each of the major funds. And then page 10 shows the revenues, expenditures, and changes in fund balance for the fund. The notes to the financial statements take a lot of paper. They start on page 12, they go all the way to page 46, I think it is. The notes summarize the significant accounting policies, give you some information about capital assets, about the pension obligation, about the retiree health insurance obligation. Some additional, pieces of information in there. And then in the back, the findings that we talked about. I will mention what one significant thing that's not included in here, and that is the federal single audit. And that's simply because, because of the rush to get this piece done, we decided to just kind of push the single audit off for now. That's something that I'm gonna be picking back up in the next month or so to get that done. And that federal single audit is something that'll be coming along,
That's
behind this.
still 2024.
It is, yes.
When do you think you'll be able to start 2025?
Realistically, probably not until fall. So, speaking,
That's only 2 months away.
well, it is 2 months away, so, our firm, our office does a lot of school district audit. And those school districts are all June 30th year ends. They're all due to the New York State Ed by October 15th. So more than likely, we won't be able to do much with this until after that's done. Yeah,
So you mentioned that staffing and turnover has been one of the issues we've seen persistently. And Chuck alluded to earlier in terms of the person who comes after him. Are we likely to see a delay as a result of the need to eventually bring on another finance director, and the adjustment from that, is that likely to delay the 2025 on?
I don't know. I haven't really looked into how things are in 2025, but that's not something I've looked at. if the information is available by mid-October, you know, we're ready to do some of that work. It's, yeah, whether it's ready or not, that I don't know.
So that's our homework assignment then.
So the audit did, issue disclaimers of opinions on the statement of activities and the statement of revenues, expenditures, and changes in fund balance.
Correct.
That essentially meant you weren't able to render an opinion,
Right,
and that was due to lack of documentation and issues related to that. Can you elaborate on that?
right. So most of that again goes back to because the beginning fund balance numbers that are really what starts that process. Because we weren't able to get comfort with those. And because some of the revenues, we had a lot of difficulty with the property tax number. I think we probably got that number pretty close in the end. We had some difficulties with water and sewer revenues. And, you know, we didn't get those numbers as close as we wanted to. We didn't get some of the fund balance numbers as close as we wanted to. I know that Chuck and Casey spent a lot of time trying to get those numbers. You know, to where we were comfortable with them, and we just didn't get there in time.
So, and I apologize if some of these questions are a little simple. This is my first rodeo going through an audit on
Yeah.
council.
Sure.
Can you explain what the statement of activities captures, what that goes over?
So the statement of activities captures the revenues, expenses, and changes in net position. But the statement of activities is from that government-wide perspective. So both of those statements, the statement of activities and the statement of revenues, expenditures, and changes in fund balance, in a lot of ways are covering the same thing, but from a different perspective. Okay, that statement of activities is the government-wide perspective. The statement of revenues, expenditures, and changes in fund balances from each fund kind of on its own.
So, given that you weren't able to issue an opinion on the statement of activities and the statement of revenues, expenditures, and changes, those two components of the audit, how big of a portion of the audit is it?
It's pretty significant, yeah. I mean, it covers, you know, it's all of the beginning to end activity. Right. As I mentioned, you know, we were able to get pretty comfortable with the ending numbers. Which I think back to your point about 2025. It is significant, and I think a really good thing that we were able to get comfortable with the ending numbers. Because if you can't get comfortable with the ending numbers, it makes it almost impossible to get next year's audit to have a good opinion. And that's really where you were in 23, right? Because we didn't feel comfortable with any of the numbers in the 23 audit. And so the 24 audit, you're already starting off way behind the 8. And we just didn't get to a point where you could get caught up enough and fixed up enough.
And now we're gonna have another change in personnel. And I'm afraid that our systematic errors aren't gonna be corrected, and it's gonna be carried through again. Because we keep losing the institutional knowledge that's built up in the position, and then it's washed away.
We know that, but how we're gonna rectify it?
Yeah, we gonna do.
We should be canvassing for a new director of finance now. Hopefully we can find somebody before Chuck leaves us. to bring that individual up to speed. We didn't have that, same liberty when, Lisa left and Beth came,
Yeah,
and when Beth left.
We didn't tell Chuck he could leave now.
Sure. But I mean, there has to be some overlap. There has to
There
be.
should be.
Have you started the search for?
Yes, we have. So, a couple things that maybe alleviate some of that. So I had it, other company came in to, review and do it. They interviewed, staff and members to try to get an assessment done, to do an assessment processes and what we're doing, and they're putting together a package to do so that they can help lift some of the issues that we have, because it's not a matter of understaffing as much as trying to play catch up and do it. I think that, like Dwayne stated, we're a lot better off than we have been before. There is a beginning, and the definition of insanity is not having a good beginning to start. At least we have a good beginning to start in 2025, which some of the $600,000 change, this was an entry that had been made before that wasn't accurate. And in some of the previous audits, there's audit changes recommended to get to that beginning number that they hadn't been changed. So they had done the changes and gone and done those, and reconciliations are already being done. So I feel good about where we are and what we're approaching and how we're approaching it now. Currently, Chuck is working on the future. Casey is working on the past, which is the audits 25, and I've been working on the current to try to go through the processes, including getting this outside agency to come in and their review what we do have and what we are doing, and then come up with recommendations on where we need to go. So that's been my current process that I've been working on the last few months, as well as managing the current budget, the current funding and finances that we have, amongst all the other functions that have to be done on a day-to-day basis, including tornadoes. So so that's been the process, and I expect to have some kind of evaluation from BST to have a number and some kind of documentation from them this week. And that'll be sharing them with council at our next meeting. And that was the plan. So that position is, we're actively looking. And there's been some other, I think I mentioned this before, there's been some other positions similar and the same advertised recently for those candidates that didn't. We're researching them to see which ones are available. So that would expedite things. And Chuck is looking at July 22nd. As I found out today.
2027. A second.
Everybody seems to be getting dates off today. So
July, June.
July, right, I get a call from the comptroller's office, July. Yeah, but, so that's the current plan, and that's the plan of attack that we've had, and trying to move this to get this needle off of this, so we can get rid of some of those issues to be able to do that.
So the audit had 3 areas that were identified as having material weaknesses: the financial reporting, capital project reporting, and reconciliation of cash book balances. I know we've went over some of this, so I'll be brief. The audit mentions that in 2024, there's an additional. Apologize, 1 second. 8.42 million in new debt. And it also notes that since then, there's been 14.5 million in debt accumulated since. 23 million in 3 years seems significant. How does that increase in debt impact our servicing costs on that debt moving forward?
I'd say it's significant. There's certainly a lot more interest expense, as well as principal repayments.
The audit also noted that the city had reached I think it was just over 91% of its constitutional debt limit. Is that correct?
It was as of the time of the audit, yes, there was, and I think it's mentioned in the subsequent event. Footnote.
The reassessment increased essentially that, okay.
Yeah, some exclusions will reduce that percentage, yeah.
I believe, Tom, everything that we can get excluded except for one time from a couple of years ago has been excluded that can be excluded. So,
So in March, we passed a $7.9 million bond for the DRI. So work that was already completed. Is it normal for council to approve spending after the fact in a new fiscal year?
I'd say I guess I'd say it's uncommon.
At the time when we passed that, it was stated that failure to pass the $7.9 million in DRI, the bond, would result in failure of the city to pay its bills for a good portion of this year. The audit also notes that the city has responsibility to make the auditor aware of any events that constitute that could cause a substantial doubt in the ability of the city to maintain its operations. Would needing to pass a $7.9 million bond to meet our bill requirements for the year constitute a substantial doubt?
Yes and no. So it would, one qualifying factor there, and one of the, since this is the 2024 audit, that language about ability to continue is based on ability to continue for 12 months. And because obviously you're still continuing, it wasn't seen as something that needed to be reported.
And that's in part because it's the 2024 audit, so it's outside of the window of that 12-month period.
Correct, yeah.
Okay. So does the audit assess the city's procurement practices, its compliance with procurement procedure and law?
As part of the overall audit, yes. There aren't specific, comments in there about that, but yeah.
Can you speak to some of what you were able to glean from that?
I guess one thing that I'd say that I think is probably a hopeful sign, if you will, is that we didn't have difficulty with expenditures with accounts payable. We were able to get pretty comfortable with those numbers. That's something that in previous audits was something that we were adjusting. But this year we were able to get those balances in pretty good order.
So with the city has had its credit downgraded recently by both Fitch and Moody's. It's another audit that is not clean. Does that increase the likelihood of a further downgrade in the city's credit?
I guess I don't know the answer.
You also assessed a bunch of supplemental information that was not high level findings of the audit, but can you speak to any areas of concern in your view of that material?
Yeah, so, right, those go back to those comments that are in the management comment letter. I think of those, the one that I am most concerned about, I guess, is that interfund balancing that isn't being done. And that there were adjustments needed to get that to balance. And again, it goes back to the overall concern about just not reconciling.
You go into detail on that one a little bit. I don't understand that.
Yeah, so,
What are you finding between water and sewer?
well, between all the funds, right? So all of the, and Actually, I'll point it,
So inter-fund balances are being the tax side.
correct, right,
So Scott, back in 20,
So the budget bonds,
you may have used money to, on a general fund that you pay the bill out of the capital fund with, okay? That would be a due to and due from.
right,
They weren't always, the journal entries weren't done properly, so they balanced.
right,
You may have only done one half of the entry, not the other half,
right,
okay?
right,
got it.
right. So
A lot of that going.
Yeah.
9 year for sure, but.
right, if you look at page 8 of the financial report. In the asset section on the top half, I guess it's the 4th line down. You can see that says due from other funds. And the total across all the funds is 10,137,000 and change. And then you look a little bit farther down in the liability section, and the 3rd line is due to other funds. And that balance is also 10,137,000 and change, right? So those numbers are balanced in the audit. But we had to make an adjustment in the general fund to make it balanced. Because internally in the city's systems, they didn't.
It's got another.
Back on the balance sheet that we talked about.
Yes.
Right.
The other part that's important about this is that these need to be paid back. Okay, because if they keep staying out there, the state will come in and say, I want to make that a loan.
Right.
Okay, and then you're gonna start paying some fund interest or principal payment out of another fund. And they'll give you maybe a year to get squared away, but then they'll force the issue.
So. I know a lot of work came into just getting the 2024 audit completed, and I appreciate the effort that. You and your team put into that. In terms of. The degree to which we can use this 2024 audit, in a reliable manner. Decisions on the upcoming budget that we will be deliberating from this fall. How reliable. Of a roadmap is this giving us?
I guess it helps. I don't know that I'd say that it helps a lot, because you're talking about, I guess, the 2027 budget. Right, which is obviously a couple of years distant from this.
What? Are there other steps, other reviews, other? Measures the city can take to get more reliable numbers ahead of this upcoming budget process?
Other than what we've already talked about, I don't think so.
Well, and we also have to remember that we have the state review board coming in at some point in the fall. And they're going to advise us moving forward in many different capacities. So, we just need to keep that in perspective also.
How familiar are you with the financial restructuring board and what it's able to provide assistance to a municipality?
Not very. I know of it. I can't say that I've worked with them before.
What improvements have we made? I mean, we're talking, a lot about negativity and what we need to do.
Yep.
What have we done to improve the situation?
Right. So again, the ending balance sheet. Comfortable with those numbers. It was a whole lot of work done to get. The overall balances. Pretty close. Close enough from an auditor's perspective.
Mark that one down.
Yeah, no, it was a ton of work. I know, and Casey, I know, worked hours and hours and hours. To get those things, and find some of those differences and make progress on So I think obviously that's a really big step. It gives you the chance, I'll say, that the 2025 audit opinion will be better than this one. I think that there was, a couple of the findings that we had in the comment letter previously were resolved this year. There were some issues with payouts when people left. That was something that was resolved. There was issues with, I'm trying to remember what the other things were that we said were resolved this year. A common occurrence back before was that sometimes monies that were coming in, revenues that were coming in, were being recorded as reductions of expense rather than revenues. That was something that had been happening a lot previously, and that was something that was fixed in the current year. So there's definitely some improvements were made. When you look at the 24 audit and you compare it to the 23 audit, definitely some improvements in those areas.
Is it a foregone conclusion that based on the improvements made in the 2024 audit that we are on a better path, or is it possible these findings will be repeated in the 2025 audit?
It's certainly possible that they'll be repeated. Yeah. Any other questions?
I know.
Well, they'll be repeated because we haven't really corrected anything from 2024 going into 2025. But I had asked that question again. What's your opinion on 2026?
I guess at this point, I don't have any idea. I mean, I didn't look at any of those numbers at all, so couldn't say.
Where do our reserves stand at the end of the 2024 fiscal year?
There is two reserves in the general fund. We'll find that. It is
You mean to say
on page
reserves or
38.
fund balance?
Fund balance, I apologize.
The overall fund balance. So the general fund has an overall deficit of around $400,000 at the end of 2024. Capital fund is negative, but it's always negative because you have those fund anticipation notes outstanding. Sewer fund had a fund balance of about 4.9 million. And then let me look back.
So you said our general fund balance, you overspent by 1.8 million,
In the budget, yes.
but in the end, we're only in trouble, only it's relative, but
Yeah.
400,000.
Right. And that's because you began the year with a positive fund balance. And it's also because, so you overspent on the expenditure side, but you also had more revenues coming in than was budgeted. Right, so in total, and if you look back at page 45 of the financial report, in total, you were pretty close on the budget. Because you overspent on the expenditure side by about 1.8 million, but you underestimated revenues by $1,766,000. Right, so in total, the variance in the budget was only $34,000.
So the overstated revenues would give you the same net effect in the end, that's what happens, so you're within $30,000 of what was budgeted overall for the year, but the overstated revenue, which we've been talking about, Katie, all along, that 1.8 million keeps on us. So that's gone, which is now, well, mitigating it this year when we found out. We're trying to mitigate that all year, so that's what we have to work on.
So you've got a company coming in to analyze the systems and how to tighten things up and get more efficient. Yeah, the processes, I guess that's what I mean by internal systems, how systematically people handle. Each,
process, every process.
yeah, every
Every level of
process,
detail.
that'll be really good. To have that assessment. They should be able to advise
That
us.
gives us targets to make sure their approach gives the council and everybody targets to talk about what needs to be approached and where everything's at, is to be done.
What about the accounting systems, the actual software that we use?
Well, AS 400 is not supported anymore. We're getting out of that completely this year. We had one more, which was the property tax, which we've been talking with the county as well, been discussing. They have them do property tax next year, and I think they're moving on doing something with that, so it might be something in the media about that. But that software is the last thing on that AS 400, which is, that goes away, so. And then cash book's gonna go away, so we don't have that anymore, and then we'll just be able to use Munis as our main source. Accounting software for everything we've done. Cashiering aspect has now been trained and started to be implemented. I don't know where exactly they're on credit cards yet, but that should be done. And then that will be completely solely on one system. So those switching, going back and forth and entering, that's where a lot of these errors are coming from. And different processes. And then as people phase out and new people come in, they're learning both ways, and they say, well, I don't know why I'm doing this entry as well as this, I'm already doing it here. Then the impact we're feeling, so that it gets, I'm simplifying it, but take that times 300 transactions and it gets pretty messy. But
Katie, the software itself, Munis is a good software.
Yeah.
I'd say it's the best, but it's one that, for our size community, is a very good product.
Yeah.
yeah, I think once we're completely into that, but right now, you know, like in the water, for example, we have 4 different water meters, then we're all trying to feed into this to make it understood to that, just inherent errors and all that. The billing processes that are being done for sewer, the intermunicipal, is finding there's errors in that. Then there's credit card receipts that are received from one software to the next and finding errors with that. And so, but they're all being addressed, and then I think once those processes are done, and then the checks and balances are there to check that monthly and audit that monthly instead of, it's been common practice to do it at the end of the year or right when you audit, but you can't. As we're talking about making these decisions, we can't make decisions 2 years later. Can't talk about 2024,
Right.
2026 and try to turn the ship. It's way too late. Or now we're 6 months into 26, we talk about all these years I got messed up, but we're talking about 26 and I've been making adjustments because we know since January it's been wrong. Here we are in June, we can't talk about it. It's too late. So I already have to make those changes. I already will be working on that to fix it once as soon as we know it. But if we don't know it, find out now, that's not helping us. So it's frustrating. Right, if anybody says anything else, then we'll adjourn the meeting and so call the meeting at 7:10 and thank everybody for the time and I really appreciate your input.
Yeah, thank you.
Yeah,
Thank you very much.
Together, and Casey for doing the work and finding it all through and hopefully get things fixed in the future and make it happen. Thank you. Thanks, Derek.